Bitcoin's volatile February continues. Strategy Sailor says he's not selling, and a crypto analyst still makes the case for a $150,000 price target for Bitcoin this year. Hey everyone, I'm Jenny Horne, and this is Crypto Corner on Schwab Network. Joining us now is Jim Ferraioli, Director of Digital Currencies Research and Strategy for the Schwab Center for Financial Research. Jim, as always, we so appreciate you joining us. The Bitcoin selling pressures this month have certainly caught our attention. Very hard to summarize, but what really is pushing Bitcoin lower?
Hey, Jenny, good to see you. So Bitcoin recently touched about a 50% correction from its all-time high. This bear market has some investors asking whether we're in a Bitcoin winter or not. Regardless of whether this is a Bitcoin winter, understanding what's been the pressure that's pushing Bitcoin lower is really the important thing here. And it ultimately comes down to leverage. As Bitcoin has grown as an asset, it's no longer impacted by only the crypto market and what goes on within it. Most recently in October, we had a lot of open interest in futures. Meanwhile, spot activity had started to slow down. And October 10th, we had a shock announcement about tariffs, and we had a blowout in leverage in the system. So that day, there were about $20 billion of leveraged futures positions that got liquidated. And that resulted in a cascading sell-off across the crypto markets. The next few months, we were actually range-bound. ETFs were seeing outflows. On-chain transactions, there wasn't much activity. And in the options markets, there was actually more demand for puts rather than calls. And so that tells you that's a market that's not really positioned for the upside. However, amid all that, you had a roaring trade in precious metals as the dollar debasement narrative really took hold in the market. And so what we saw was crypto investors actually margining their Bitcoin to open positions in precious metals futures contracts. The theory there was that Bitcoin is also a dollar debasement trade, and that at some point it should participate in this rally. Now, the precious metals rally may have moved away at some point from just being a dollar debasement trade, and it really turned into its own momentum trade. Amid all that, there was still very light positioning and light activity in the spot crypto markets. We also began to see a buildup in futures open interest again. And so ultimately, that creates an environment that's ripe for liquidations. There's still more demand for puts. There's not a lot of spot activity, and we're having a leverage rebuild. And so what recently happened, which saw Bitcoin break through the low 80,000s and trade down to about $60,000. First, in the final week of January, the odds of a government shutdown rose. And so that led to the initial push through 80,000. The next thing, the naming of Kevin Warsh as the new Fed, which was perceived by the market as a hawkish Fed chair, that ultimately put a dent in the precious metals market. We saw silver fall 30% in one day. And so when you have a move like that, your underlying collateral gets liquidated. And so as a result, you had Bitcoin liquidations, which resulted in futures getting liquidated as well. And that really pushed us down to the low 70,000s. And then finally, the final pain came amid tech earnings. The past few years, Bitcoin has maintained a high correlation to mega cap tech. Over the long term, Bitcoin is still a low correlation asset to other asset classes, but on a shorter term basis, there's been several periods throughout its history where it has had a high correlation. And so some of the tech earnings weren't as well digested by the market. And so that led to additional pressure on the price. And so it was really a confluence of these three factors flushing out the remaining leverage in the crypto system.
Okay, and meanwhile, Strategy's Michael Saylor says he is not selling. The company actually added more Bitcoin this week worth a cool $90 million. So tell us more about him doubling down here.
Yeah, Michael Saylor continues to be a Bitcoin bull, recently acquiring about 1,142 Bitcoin. Now the company has an aggregate purchase price of about $54 billion across their Bitcoin holdings. Obviously, as a levered play on Bitcoin's price with the sharp bear market we've seen in Bitcoin, strategy has come under pressure. This is not the first time we've seen this. If you go back to 2021 and 2022, the bear market that ensued, there were similar criticisms as well. He doesn't appear to be backing off his strategy, and he feels that there's a lot lower Bitcoin can go before the company could ever have to liquidate its holdings. He's been very vocal about this historically, that they do not plan on selling. If they need to, they'll refinance their debt. And so he seems convicted in the price. And if the bottom is in, maybe he'll be vindicated. But obviously, if we were to go lower, there would be more pressure on the company.
Okay, and lastly, amid this volatility, the analyst team at Bernstein are calling for a $150,000 target in Bitcoin this year. So, what's really driving that case?
Yeah, Bernstein recently reiterated their view, which was what they put out in the beginning of the year. A lot of the drivers that they laid out involve things like having a pro crypto president, ETFs that are allowing spot buyers in the open market, institutions getting involved, and corporates buying on their balance sheet. So they made the case that this is the weakest bear market ever. There's nothing been in the market that's structurally broke. For an example, 2022, you had large exchange go under. In past large bear markets, we've seen things like that. In 2018, the ICO bubble burst. In 2014, Mt. Gox, a Japanese exchange, got hacked. We haven't seen any of that this market, so they're making the case that amid the backdrop, there's a lot going for Bitcoin, and they think it can rally on greater liquidity. They think the fact that it's underperforming gold makes sense because Bitcoin is not a liquid, safe haven asset. It's a risk asset. And beyond that, the AI stocks and infrastructure is absorbing some of the flows that would go into Bitcoin. Beyond that, they think that there's still a really attractive backdrop for Bitcoin to rally back above where it was and even make a new high. I'd like to point out that we have a different view at Schwab. We actually talked about this on Crypto Corner at the end of December, if you recalled. We made the case that it would be a year where Bitcoin's correlations to other assets starts to fall, which is what we've seen. We made the case that it would be a positive year for Bitcoin, albeit we would not see a new all-time high. One of the key drivers that Bernstein had pointed out was liquidity fueling Bitcoin after this correction. And that's really the area where we disagree. The biggest driver of liquidity over the past few years has been reserves coming out of the reverse repo and getting lent out into the economy. The reverse repo is now depleted. And so that's been the biggest liquidity boost over the past couple of years. That's no longer a thing. Quantitative tightening is ended, and so that's a net positive that we're seeing balance sheet expansion, about $600 billion a year. And the Treasury General Account is more of a seasonal thing. Around April, you see flows out of the economy, which then get spent back down as taxes are collected and the government starts purchasing goods and paying their employees. But ultimately, we don't see this as a very strong environment to see the liquidity needed to get back to these levels. So again, we think there's still attractive things for Bitcoin and the crypto market. This is a momentum market, and in a sharp sell-off in any asset class, you often need a new narrative or a catalyst to kind of reset that momentum. And we think that could be the passing of the Clarity Act later this year, which could lead the way to a more sustainable rally in the back half. But again, we disagree on the notion of a new high in 2026, but we do think it will be a positive year. And in the end of the day, Bitcoin is volatile. It has sharp sell-offs almost every year. And in hindsight, 2026 will kind of be remembered as a boring year in Bitcoin terms.
Hey, boring, I think, would be very much welcome given all the volatility we've seen just in the first, month and a half of this year. But appreciate it, Jim Ferraioli, for joining us. And that'll do it for Crypto Corner. Be sure to like the video and subscribe to Schwab Network's YouTube channel. I'm Jenny Horne. We'll see you again soon.